In a world stricken by fear and pandemic, clearing the streets of every major city worldwide, stricken every individual citizen to their homes with nothing better to do than clear the toilet paper shelves and play video games, one YouTuber that strives to bring the best investor entertainment has been dealing with one of the biggest problems he's ever faced, and that is his subscriber base commenting about his hair looking that too similar of a chicken, and he needs to resolve it soon as possible. He will stand above all and resolve this problem to continue bringing you the best S&P 500 stocks. Now that we got the relentless comments out of the way about my hair, I know it's not perfect, but heck, it was better than it was while I wait for the hairdresser to come off quarantine. I went through the entire S&P 500 list, finding the best performing dividend stocks. I found 10 of them, and some of them are even on the green for the year, and I look so forward to breaking this down for you. So ladies, gentlemen, let's hop right into this.
Drop it.
Welcome back, my passive income investors alike, to the S&P 500 top 10 performing dividend stocks through this crazy pandemic period we are all facing sitting here at home. And again, hopefully this looks a little better. So again, slap that like button for the haircut, guys. But getting right into this, starting with Activision, Blizzard, video game companies are probably going to be some of the best performing. I'm sure we can see the statistics when they come out on the quarterly earnings about how many people have been playing their games. And Activision Blizzard has been holding up nicely through these insane periods of time with a 0.73% dividend yield. PE ratio still a lot higher than I'd like to see it, being a $43 billion largest gaming industry out there. We all know the games like Call of Duty. If you're not a video gamer, well, I'm sure you're going to be hearing about some of this stuff, which leads me into the second stock, which is also a video game stock called NetEase. I never personally heard of this one. Some of these I've actually never came across until I started going through this list over the last hour, but taking a look, this pays a 2.29% dividend yield, and I've never personally played any of their games. I feel like they're more mobile based, as it obviously offers them in the App Store, Google Play, Game Room, Steam. So I'm going to presume that these are mostly mobile games. But again, an exceptionally good performer through all of this, leading me into a part of the sector I was actually well aware of years ago would be performing pretty good in a situation like this. And we're talking about Dollar General. The dollar stores, where you're getting your hand sanitizer, where all the cheap people are going to go when they don't have a lot of money. Obviously, recession-proof brick and mortar store, which is a rarity leading into this century, considering with companies like Amazon, right? But this pays out a 1% dividend yield and a PE that is still a little higher, but we're talking about a $35 billion company. I personally buy a lot of my stuff for my shows at the dollar store because obviously cheap candy, things that I do when I'm performing for kids, all of it comes from the dollar store. So another incredible recession-proof company, leading me into one that I have talked about recently, and that is Clorox Company. Obviously produces all kinds of chemical cleaners, things like that, with a dividend yield of 2.47%. Still a little bit higher of a PE ratio than I personally like to see, but we're talking about a cleaning company when that's all anybody is talking about. And in fact, it is up on the year. If we kind of scroll this down to 2020, we can see the stock's actually up 12.24% before the dividend. So that's some pretty incredible performance, and again, makes a lot of sense considering the images they're showing and the products they have to sell. Now, moving into a more interesting and unusual part of the economy, I'm talking about Digital Realty Trust, essentially. This is like a real estate investment trust, primarily done for databases, and this stock is actually up on the year with a 3.37% dividend and an absurdly high PE ratio for a REIT. And taking a look at this company, guys, very interesting niche in the entire real estate sector. Considering most REITs are getting slaughtered right now, this is one of the very, very rare exceptions in the REITs, guys, and you should definitely check this out. I'm going to do some more homework on it. I'm finding it kind of interesting considering this company literally just serves to data centers, so obviously they probably don't need a lot of employees, not a lot of maintenance involved, and it's just probably going to be a mass warehouses filled with computers. Fascinating REIT, I might say. Moving into our next stock, we're talking about Citrix Systems, a software company that is actually performing insanely well this year, being up about 24% with a 1% dividend yield, a 27 PE, and about a $16 billion market cap. This company does just software engineering. I think they also do some security and safety in the IT sector of the market. Another really interesting idea, considering we're kind of moving more toward technology. It makes sense that in a bad period where everyone's on their computers, that software and security probably be a little bit more important. Now, getting into Gilwood Science, we're going to be talking about these biotechnology companies that are probably out there fighting to come up with a cure to this. And obviously, there's going to be a lot of eyeballs on companies in the pharmaceutical sector, with this one being up 11% on the year, but hit a high of about 20% with a 3.74% dividend, a 17 PE, finally a little bit of a lower one out of all the other ones we looked at, with a $91 billion market cap. This thing is a conglomerate on the S&P. Obviously, this company is going to be one of those experimental drug kind of coming up with solutions to modern day problems and, building distribution centers around drugs. I mean, that's just expected for a pharmaceutical company, right? Now, let's move into a company that's probably affecting us a little bit more deeply because we're all buying that toilet paper. And if you've ever been to Costco, we're talking about Kroger, a massive company that produces all kinds of products, I believe, from clotheslines, toilet paper, the whole 9 yards. And I guarantee you there's something in your house probably with the Kroger logo on it, actually being up on the year, up 2% roughly on the year, with a 2% dividend yield and a really low PE ratio for something that is going to be this sustained through this crisis. So pretty incredible that way, and a $22 billion market cap. And again, guys, you can go scroll onto their website. I guarantee you have something in this company's product list sitting in your house right now. Man, they have such a wide variety of individual products. It's like the 3M of the food world, and they have such a good distribution network. Again, with Costco, Walmart, you're usually going to find these products floating all over the place, leading me into my last two companies, which are more or less honorable mentions because we know these companies are in the media. We know they're doing well. My mother was just there yesterday. We're obviously talking about Costco stock with a $126 billion market cap, not being up on the year, but I'm really confident when those first quarterly earnings come out for this company, it is going to be doing exceptionally well. And you guys can go scroll on over to Costco. They're taking so many measures to deal with this current situation. They're actually building bubbles for their checkout registers so people don't have to touch anything. And then on top of that, they have literal cleaning material all over the place, just constantly cleaning the debit machines. Everyone's probably doing tap. They're force measuring people to stand apart from each other. Lineups down the road. It's Costco's the new club. Is it not? Like, you ever go to a club night, you're waiting in line? Well, Costco's just the new party club, guys. Which leads me into this final stock, which I am more than confident you're aware of as well. And we're talking about Walmart. Walmart is another exception with Costco to these insane times. And it's going to be really, really fascinating to see those first quarterly earnings, guys, because something tells me we're going to see a nice tick to the upside for both of these, considering they've been flat trending. And Costco, trades with a 2% dividend yield, a 21 PE, and a $309 billion market cap. So if you're comparing the two, Walmart is quite a conglomerate in comparison to Costco. But if I'm being 100% honest, I am not personally going to be buying any of these stocks. Many of you know I'm looking for major discounts out there. Any value investor out there knows that you're looking for some extreme volatility to pick up some of your favorite companies on major discounts. And a lot of you are aware of those companies I'm looking at, which is every stock that I own in my list of 14, which I'm going to take a break from, analyzing today, because it's all I've done over the last few days is talk about how my portfolio has been doing $20,000 mood swings on a bi-daily basis. So you guys can go feel free to check that out in some of my last videos. And I want to say thanks again to everyone supporting this. I'm finally starting to see a downtrend in the ad revenue. So every YouTuber out there has probably seen a 50% decline in their ad revenue. So going actually into my YouTube dashboard, just to be a little bit more transparent with you guys, I'm going to show you the cost per 1,000 views and how much I'm making. And that stands for CPM, which we can see right here. So for every 1,000 views I bring in, I'm likely to make about $20. And with my YouTube growing faster than it ever has, we can see a decline over the last 28 days on how much I'm getting paid, with the peak being at $26, where we sit today is at $14.28, which is a really good sign to those people like myself that were a big fan of Google and Facebook. I really think that their views are going to be off the Richter scale. Their charts are going to be crazy. But the problem is there's not people out there that are going to be paying for as many ads. So I, as the YouTuber that's kind of promoting these ads, is not going to get paid nearly as much. And let's
expand this to the last 90 days. Luckily, and again, thanks so much for you guys helping me through this, because this is one of the only income sources I currently have. We can see that it peaked right around February 26th, with the average CPM being around $35. Now, I'm hoping it doesn't downtrend too much, but we can see going from 35 all the way down to like that $12, $13, $14 area. That is a 50% haircut, which every single YouTuber is probably feeling right now. And being in the finance niche in the stock market world, that has some of the highest paid ads, because depending on who your audience is targeted toward will debate the advertiser's attraction towards your videos, and also debates on how much they're willing to pay to get in front of that audience.
I mean, that is something that is starting to affect me now, but at least I'm still able to make these videos for you guys. I'm glad more of you guys are watching this video, because it's severely supporting me through these rather tough times. But I hope you're safe. I hope you're staying cool, guys, and I look so forward to chatting to you this weekend.